All right, everybody, welcome back to the Cash Flow Chronicles. Been a couple weeks, schedule's just not working. I was away on business and glad to be back. November 11th, 2025. Lots to talk about. Market's been up, market's been down, the government's been closed. Mr. Patel, how you doing?
I don't know, man. I feel like I'm talking to a cult member right now.
I
I
am
mean,
a
look
cult
at it.
member.
You got
What cult you want me to be a part of? I'll be a part
you're
of all
part
of
of
them.
like two other cults. You're part of the Rocket Lab cult. I mean, they've made you money, so I totally get that. The Rocket Lab cult and the company that shall not be named.
I mean, first and foremost, I'm going to interject here. I'm not a part of the Rock Lab cult. I am the Rock. No, I'm just kidding.
That is true. You are definitely
No,
one
I'm
of the
just kidding.
leaders
I'm
of the
just kidding.
cult. But you
I'm just
deserve
kidding.
your flowers. No, you deserve your flowers for both of them. They've done extremely well, and every shareholder who's been in them has done extremely well. So hopefully the company we're going to talk about today, we can start the cult on Venture Global. What do you think? You think that's worth doing? It's definitely not the tech company or the hey, we're going to get into space company vibe, but I think this company deserves a little bit of a cult following. What do you think?
I I agree. It's different than Palantir and Rocket Lab, but the stock performance I would say is eerily similar to
Mhm.
what happened to both. Like for quite an example here, I was started investing in Rocket Lab at like $11-12 pre DSPAC. So Rocket Lab
Mhm.
started as a SPAC, Vector Acquisition Group (VACQ), and went from 10 to $11 to $12 kind of after the announcement. A lot of people were excited about the rocket industry at the time, the space industry, and then obviously dropped down to $3.50, where I picked up some shares, etc. Now here we are, right? We're in the
Mhm.
40s, 50s. At one point, we're up in the 70s. And Palantir being the same, right? The first day it went public through direct listing, in September 30th, 2020. It started at $10. It went up to 11, and I think it closed at one point at like $9 or something, 9.50 or something like that. So, and then all the time went down
No,
at one point to like $6, $7.
no, it went all the way up to 35 in
Not on day
2020.
one.
Not on day one, but eventually it went up to 35. And then we had that massive move down, and it kind of just consolidated there for like 3-4 years while people were trying to figure it out. And it shook out a lot of people, including myself, because I was like, oh, they're not making progress. They're not making progress. But then all of a sudden, when they started to make progress, everyone's like, oh my God, wait a second. There's a real possibility that this company's going to make a crap ton of money. And I mean, it happened with Robinhood too, remember? And SoFi. So if you
Yeah.
look at all of these companies, when they initially come out, there's a lot of interest in them. And so a lot of people kind of buy them up. And then there's this period of volatility where things kind of just happen. And then usually this nice long consolidation period where the core believers end up adding more and more and more. And then the people that are just like, whatever, and they get out. And eventually, once you hit that inflection point of profitability, it's just like, wow, there's just really no stopping this thing. And the way I see Venture Global is kind of in the same position because, when they first IPO'd, all they really had was Calcasieu Pass, right? That they were
Mhm.
generating some cash flow with. And they had begun construction on Plaque Mines. And right now, Plaque Mines is almost ready to go, like ramped up, they've ramped up super fast. They're generating a good amount of cash flow from it. And they've already got CP2. I mean, dude, this off takers like literally are just signing up by the day now. Like in the last
2, 3
week.
times a day. It's
Yeah.
insane. Yeah.
It eerily feels similar to what we went through with Palantir as well, where every day people were tracking like, oh my God, like how many people are signing deals with Palantir. And then all of a sudden, when they started to break out revenue growth, it was on another level. And it's for Venture Global, it's not going to be total revenue because that's not how this industry works. You have to follow the EBITDA. The EBITDA is where you'll see the value of this company. So over time, as the EBITDA grows, the value of that cash flow can translate into shareholder value. Right now, these guys are in growth mode. So even if the share price is languishing at $7-8, you know, they got to strike while the iron is hot. And so right now, all of the cash flows that they're getting right now, outside of paying their debt payments and paying their workers, is going right back into building more LNG facilities. And the two that they have that are coming online, well, not two, but like multiple others that are coming online, are just, they're monsters. And the part that shocks me, to be honest with you, with this company is the speed at which these guys are moving on adding capacity. I mean, you have some of these projects that have been sitting for 7, 8, 9 years waiting to get the financing done and construction on the way. And they're finally starting construction. And it's like, okay, when is the delivery? And they're like, not for another 3 years. And these guys are like, yeah, we expect first gas in about 2.5 years after FID, which is kind of insane for this industry. You know, these things are massive, massive.
I mean, I agree with you 100%. Like, to give people the lay of the land, there's only about 110 MTPA exported annually on an annualized run rate. And at the moment, Venture Global is 30 MTP of that, and they've just gotten started. The earnings call, I was kind of surprised at the progress. I mean, we had an initial check-in about CP2 in the second quarter, which I believe was, I don't remember exactly what date, it might have been August, but here we are, 3-4 months later, getting a check-in for CP2, and they're already getting 8 of those trains out of the 36 or something like that for CP2 already. So I wouldn't be surprised, man, if by the end of next year you start to see some commissioning, because they were able to go from basically like 1 train being on site to 8 trains being on site.
Is it on
within
site,
a
or is
single
it
quarter.
is it on
They said
site,
they were
or
completed. They said they were completed, so they didn't really answer whether or not it was on site or not, but they're
no. So
definitely completed.
okay, so I'll tell
In
you what
terms
it
of,
is.
I mean, manufactured, I mean,
Right.
not like, yes, yeah.
So let me show you guys what Matt is talking about. So right here, so unlike the other, what are they called, liquefaction trains, that are just these giant trains that they're building off, like on site, like one at a time. What these guys do is, it's a more modular system, right? So you see these trains right here, these are LNG trains. And so 8 of them are already done, like just ready to go, ready to be shipped. And they're making these at the Baker Hughes facility in Italy. So in Italy, they're working on these things. And as they build them and they're done, Venture Global, it does all the site work, gets everything ready. And these things are like plug and play. So literally they get shipped over from Italy, get dropped into the site, and get hooked up and start producing gas, right? So like I said, they're moving at one of the most rapid paces of infrastructure that I've ever seen, ever, So
Because generally speaking, like, and this is why these are awesome, because if you look at these and you were to compare them to, say, what's going on in next decade, like next decade, it'll have like 4 of these kind of in a row. Like it'll almost like be 4 times the length and probably twice as high comparatively to these things. And so there's a difference. One of these maybe makes 750 million to a billion standard cubic feet. Sorry, that's a lie. 0.75 to 1 MTPA of gas in terms of liquefaction and an annualized basis, versus those long trains, the larger double high, probably 3 to 4 times as long trains that you see at next decade, or more so into the 6 MTPA. So the modularity of these obviously makes it faster for them to potentially get hooked up and plug and play, comparatively to the other ones, which are more, I guess, built in place and from the ground up, if that makes sense. So just excited to kind of see this really start to get ramped up. And you can see that the pipeline's already delivered, the major power equipment's already delivered, 99.5% of the engineering is complete. So really, we're just getting to the part of now actually putting this into construction. You can see already $8 billion invested. I think overall it's going to be close to a $20 billion project. So in that respect, like they're moving along and they're getting things up and going. I wouldn't be surprised if in the fourth quarter you would actually the end of the fourth quarter and in February timeframe actually see some of these trains on site and actually getting plumbed up. It'll be cool to see.
Yeah. Yeah, I think we're definitely going to talk about the stock price and why it's languishing right now, even after earnings, where they did have some really good information. Um, you know, what? Let's get that out of the way first, because I think if we just get that out of the way, a lot of people have been asking me like, "Oh, why are they down? What's going on?" And the truth of the matter is, whenever you're investing in a company, one of the things that you're going to deal with is litigation issues. All right, when you're a public company, you have counterparties that you've signed deals with, and sometimes those deals can go sour because there's disagreements. You know, people are always going to try to fight for their best interest. Venture Global is going to do its part for its own shareholder interests, and the other companies are going to do what's right for their shareholders. It's just a matter of interest. Now, the thing that you have to remember though is that while this whole disagreement plays out in the courts, there's uncertainty, right? So right now, Venture Global, and let me give the backstory really quickly for those that don't know. Number one, you had Calcasieu Pass was coming online and they were doing commissioning cargoes, and there were a bunch of off takers, including BP, Shell, Repsol, and some other ones that basically signed deals, long-term deals to get LNG from Venture Global, in order to basically sell it themselves, right? So they're basically middlemen. Venture Global produces the LNG. They signed a long-term offtake contract. They get that LNG and they sell it into the market at whatever the spot price is, and they make money off of that, right? So it's kind of like like ExxonMobil says to a gas station, "We will sell you gas," and it's the job of the gas station to sell that gas to people, right? Now, whatever the price is now, imagine right now, ExxonMobil says to the partner, "Hey, we'll give you gas at $2 a gallon," and then all of a sudden the price of gasoline skyrockets to $20, and now these gas stations are sitting empty while all the Exxon gas stations are getting $2 in gas and making a crap ton of money. So a lot of these guys are arguing that what Venture Global did was wrong, in that they should have been providing them with the gas and letting them make money, right? And Venture Global said no, like the facility was not fully commissioned, like, so we were not entitled to give you guys any gas at the time. And the entire time, Venture Global was generating huge amount of profits, which then they used to kind of build out, they paid down a lot of debt on Calcasieu Pass, but then they also used some of that capital to invest in Plaque Mines, and Plaque Mines is right now like doing its thing. So what the argument was by a lot of these guys, that we should have gotten the gas, and because we didn't get the gas, we lost on potential money. Like, we should have got this money, so we lost on that regard. So each case is separate because there's off takers that are doing different things. So one of the off takers, Shell, they were in arbitration with Venture Global and they lost their case. And arbitration is one of those things that it's not technically like a criminal court system. It's more like two business parties in disagreement, and a neutral person sits there and listens to the case in its entirety and says, "Listen, you guys agree that whatever decision I make is final," and then the other person says, "Whatever you disagree, it's final." Both say yes. And in the Shell's case, Venture Global won, and so the arbitrator said no, like these guys are not due for any compensation, because Venture Global was well within its rights to not provide that gas, and instead to use that as commissioning cargoes and then sell into the open market as they were doing. BP, on the other hand, their arbitrators said no, Venture Global was in the wrong. So now Shell is going to the US court system and saying, "Hey, listen, I got ripped off by Venture Global." The problem is, arbitration is very, very, very difficult to undo. It's not like, hey, once our arbitration says, what is that thing called, that this party's in the right and this one isn't wrong, you could just overturn it. Otherwise, the purpose of arbitration would be completely moot, because everyone would just say, if the project, or if the ruling wasn't in your favor, they would just go to the court system, right? So arbitration is one of those things where it's pretty final, and it's the same thing with BP and Venture Global right now. BP won their case, and so Venture Global can't just say, okay, now we're going to go to the courts because we disagree with arbitration. That's not how it works. The damages on the BP side have not been fully quantified yet. Not to mention there are other off-takers that are, who have much, much smaller interest in the project. They're also going after Venture Global, saying that they deserve to get compensated for the loss on or potential losses that they incurred by not getting the gas like they should have. So this arbitration process is going to go through its motions. It might take probably another 2 to 3 years. I can't say 100% when exactly all of this stuff is going to get resolved. But the point of arbitration is eventually it will get resolved. And as far as I'm concerned, none of what the arbitration rulings are going to have as big of a long-term impact on this business as much as the market is giving it, right? So the whole thing right now is basically just uncertainty. It's pretty similar to how we dealt with like the Google thing with antitrust, where people were looking at Google saying $150. I don't want to buy this company. They could get broken up by the Department of Justice for antitrust, and so everyone was staying away. And the minute that whole thing got resolved, all of a sudden now Google is twice the price. And it's like, what the hell just happened? Like, did anything fundamentally change with the business and its earnings power? Like, no. These are things that happen, but the market hates uncertainty. And that's what's this company is going through right now, which is fine. Meta had to deal with it when Congress was going after Zuck, saying that you guys were cooperating with the Chinese and the Russians for like election interference. Microsoft had antitrust issues all throughout the 2000s. Amazon is going through that phase of unionization where everyone was getting unionized. So these things, in my opinion, are usually very short-term in nature. And once they get resolved, the long-term business value eventually comes to the top, right? So for people like myself who are like, I somewhat understand this business. I know that the rate at which they're moving and the prices at which they're able to throw off significant amounts of free cash flow, maybe not right away, but at least in 3-4 years, there is huge value in buying the company now while it's still trading at $7-8 a share. And the key to investing long term is if you try to just invest in more profitable companies, you are going to be in a position where you're kind of losing out on long-term total value. So for a company like Venture Global, I see this company eventually getting to double-digit EBITDA, right? Which means that if you give it a fair multiple of 10, so 10 times EBITDA, and at the same time, if they're able to hold down their debt with existing cash flows, financing the additional construction, because right now they are generating significant cash flows, they can use some of that to keep building these new projects. You're going to see that value compound. And what's going to eventually happen is you're going to get about 10, this is just my estimate, about 10 billion in EBITDA, and the debt is going to be around 40 to 50 billion, somewhere in between there, depending on how much of the cost that they have. So if you think about it from an enterprise value, this company should be worth eventually close to 50 to 60 billion dollars. And so some people are saying, well, if it's only 18-19 billion right now, that's a 3x in 3 years. Is that really worth investing in? And then I have to remind people, like, yeah, but with a business that throws off this much cash flow, what ends up happening is they can buy back shares at a very, very fast clip. So if you see something like Cheniere has a very strong and active buyback program, and same thing with dividends. So from a total return standpoint, you're looking at a really good long-term value return for a company like this, but you have to be able to kind of weather this uncertainty storm around the what is it called, the legal issues that they're going through, and that's just how things are. I mean, every company has to deal with these things. So sorry, Matt. There you go, you're back.
I was hiding. I think I agree with you. I think it's really just up to the person that is investing, and I think there's a lot of people that are running scared, and I think unfortunately it's because maybe they didn't do their full investigation of what's potentially the company is all about. It might have just followed blindly into other people, either on X or me and yourself. And first and foremost, I think everybody just needs to recognize, like, I'm investing for my time horizons, my portfolio, and the like. I'm not out here telling you what's right for your program because I don't know everybody, right? There's 250 people watching right now, and I don't know what every single one's portfolio looks like. And I'm not sitting here as an advisor because I can't advise you. I'm just talking about my bag and what I potentially think is appropriate for me. And I could be wrong as well, right? Who knows? But I'm very cautiously optimistic that this business, I think Chris might be underselling the 60 billion. I personally think it's probably going to be closer to 100 billion in terms of once this thing is fully built out. I mean, I think you might have been talking the next couple of years, but I'm thinking in 10 years time, when you have all these expansions and CP2 and CP3 online with their expansions as well, that easily this company could be throwing off 12 to 15 billion dollars in EBITDA. And when it does, you multiply that by 6, 7, 8 times, and there's no reason why this shouldn't be an 80, 90, $100 billion company, if especially knowing that the nameplate capacities are just getting completely blown through. And kind of going back to initially what you're talking about, I don't think that you're getting the nameplate capacity uplift on, say, Calcasieu Pass, but Plaquemines is seeing massive amounts of nameplate capacity expansion. They've already expanded it once. I'm sure they're going to go to FERC and expand it again. But I think initially the nameplate was supposed to be 20 MTPA, and I think that they're actually producing closer to 28 MTPA on an annualized basis, and they still have 2 more trains to fully commission. So, or get commissioning rather, not fully commissioned, but get commissioning. So I'm cautiously optimistic, and as you guys have known, maybe you do, maybe you don't. They've already produced about 4.5 billion in terms of EBITDA this year, close to it, and they're on track to produce at least 6 billion. And the company's worth at the moment, just south of $20 billion. So on a price to EBITDA basis, extremely cheap. And we're still building, right? I mean, people are pricing this as if the company's not going to continue to grow, and here we are, right? And the investment grade from the bonds are getting better and better, and so the company's going to be able to, as they refinance from construction loans to long-term finance loans, to actually keep these things up and running. It's only going to get easier and better, in my initial thoughts. So that, and one of the cool things that you're actually starting to see, Chris, I'm not sure if you've dug into the 10Q yet, and apologies if I'm making an assumption here, but you're actually starting to see the shipping business start to pull in some decent money. So if you remember, they're going to have like 8 or 9 ships, and some of which have already been delivered, I think 3 or 4 of which, and they're going to have another like 5 or 6 be delivered over the coming 18 months or so. That alone, the profitability of that business in the first 9 months, which I think hasn't necessarily been a full 9 months, but just the first few, is over $150 million net income, which is phenomenal. And the revenue generated from that, obviously, we're talking about the spot lifting and being able to sell that on the spot market, is doing pretty decent. So a lot of people are noting the recent deals that have been going on. Chris touched on it when we first started the stream. These are deals specifically for CP2. So if things were truly that bad on the, I guess let's just say, arbitration front, then people wouldn't be signing up, and people are signing up hand over fist. You had JERA, you had another Japanese company sign up today.
Mitsui.
You have a lot of people
Mitsui's
signing
a
up.
huge company.
Yeah, you have lots of companies signing up to get access to these. And if it was that big of a deal, then would they really be signing up? And the answer is, I think, they see the opportunity. They need Japan being a company that's prime in needing natural gas to import. And I think that they need to secure it because they know that once the 2030s hit, Australia's capacity to export is going to be hindered, I think, a little bit. So we'll see. There's other Southeastern Asia projects that are potentially in the wings, but in Australia, I don't know. It's looking pretty tough in the current regulatory environment in Australia.
Yeah, another thing to consider with these guys is that from a cost perspective, they have one of the lowest liquefaction costs of any other producer. And one of the reasons why they have such low cost is just how much of their front right here. Let me just show you guys. So this is something that they, I don't want to say snuck in there, but it's actually very really small in the fine print. Do you guys see that right here? Assuming 2030 fixed liquefaction fee is $2.30 MMBTU on long-term spot contracts. So if you go to any of the other liquefaction providers, they're charging about $2.70 to almost $3 per MMBTU for liquefaction. These guys are undercutting them by a lot. Now, what does this mean? That means that any additional demand that's out there, these guys are basically undercutting them. And so that's why they've been able to sign contracts very quickly right now. And the part that I like about what the unit economics for CP2 are is what Mike Sable spoke about, was saying we're going to keep a lot more of the capacity for ourselves, right? So it's not a matter of just, hey, let's sell a good portion. About usually with these liquefaction trains, about 90% plus of the total capacity is sold to off-takers on a long-term basis. But what these guys are doing is saying they're keeping a lot more of their inventory to sell on the spot market, where you get much higher rates. Now, of course, you do take more risk on. Don't get me wrong. Like right now, one of the risks that this company does have to deal with is what's happening right now. So if you look at natural gas prices US. So if you look at the Henry Hub gas prices right now, they have been, where is it? Okay. So you see this natural gas price for Henry Hub, which is what we trade at here in the US. Right now, the price of natural gas in August was $2.80 per MMBTU. All of a sudden now, because we've got a little bit of a cold spell and we've got all this demand from AI data centers, demand has gone up and inventories are not that high. So now the price of natural gas here in the US at Henry Hub just jumped all the way to $4.50. On the other hand, if you look at what happened in what's going on in Europe, they've got so much gas that they've already filled up with that their price has not caught up. So that net spread has basically squeezed, right? So remember, you still need to make a margin on the liquefaction. So you take US prices, you basically liquefy it, it usually adds to the cost, and then you ship it to Europe and you ship it to Japan. The problem is, if the prices in Europe and Japan are materially lower than the cost, what it costs you, that means that it eats away into your margins. So that's one of the risks that you take on when you're trying to do like spot sales, where you basically are guaranteeing delivery price on natural gas, but then the cost that you're paying for that feed gas can get rather expensive. So like I said, this is just one of those things that the company has to deal with. And this is any commodity based business, right? You're going to have to deal.
And there he goes. I think one of the things as well that you need to consider while he was talking about spot prices, there's when you had the fixed term, spas and everything the like. There's the piece about specifically the 15% of Henry Hub as well. So while there's potentially the floating floating spot prices, the spas themselves have a piece of the 15% Henry Hub price built in a little bit. So it helps offset to an extent. I kicked Chris. He was talking to. No, I'm just kidding. He kicked himself. What do we got? Is that a virgin mojito?
Yeah.
Dude, living the dream. Yeah, you cut yourself off. What were you?
No, I'm just saying that's one of the risks that you basically take trying to be a what is that thing called? A merchant, right? So right now, a lot of the other companies like Cheniere, their primary goal is we're only going to do midstream, where they're basically just acting like the toll bridge. from what I can see with Venture Global is they're not they're not dreaming of just being a service provider. They're dreaming of being their own super major. Like you're looking at a mini Qatar growing inside the United States. And at some point, I think they're going to have more capacity than Qatar does right now. But then Qatar is also adding a lot of capacity. So the key here is the long-term value proposition for Venture Global is really, really strong, but you're going to need to have some patience. This is not going to be one of those things that it's like a software company where they have like a breakthrough and all of a sudden the revenue start to double every year. And now all of a sudden the stock just gets absolutely crazy, crazy value premium. This is much more of a methodical, hey, the future is LNG and, you know, and as the demand grows, this is a commodity business. The good thing is the amount of competition after 2030 of new sites coming online is going to diminish significantly from what I'm reading right now. There's already like talk about basically a supply glut in the future. I don't necessarily see that supply glut. I think demand is one of those things that is it tracks with the ability to supply at a good cost. And so Venture Global is doing that specifically, where they're trying to provide as low cost of a natural gas pipeline to the Europeans, to the Asians that actually need it to grow their economy so they can wean themselves off of some things like coal, right? And as people get more and more lined up behind LNG for their needs, the value proposition of that continuous relationship gets better and better,
Yeah, so that slide that Chris had up was actually a pretty good one because it basically explained that once you get CP2 online, the fixed costs associated with where they want to get to will at least add about $2 billion of EBITDA on its own. And then the floating costs will hopefully add an additional $2 to $3 billion a year. So that facility alone, pre, I guess, any sort of expansion, will be producing approximately $4 to $5 billion in EBITDA that you can then pay off. And it was basically showing here the commissioning cargoes. This is why, even though the company has built two pretty large facilities, it only has $30 billion worth of debt, and it's already invested $8 billion into CP2. So if you think about it, it's like, you have $30 billion and CP2 is already partially paid for, almost 50% paid for, and maybe a little less than 50% because the total project cost is 29. But phase one is probably 50% paid for at this point. And you're going to be able to start paying that off before you even finish. Same thing with Plaquemines, right? Plaquemines is not even fully commissioned yet, and it's already starting to get paid down. So overall, I think it's impressive to see the company's making $6 billion at the moment. This potential will add another 4 to 5. Granted, that $6 billion isn't going to stay consistent. Some of that's eventually going to go into on-demand commercial contracts, which will reduce the amount of EBITDA you get from Plaquemines. But then you have CP3, and CP3 is going to be the largest of all of these projects. I think it's going to be 30 to 35 MTPA nameplate. And that'll hopefully be something that's much larger than even CP2 in terms of the amount of EBITDA that it's able to kind of generate. So I just think that if you believe in the United States and having the ability to have natural gas as one of our main commodities that we can export, and you think that there's you have the time horizon to wait, I think that this is honestly a gift. And I thought the same thing with Palantir. I thought the same thing with Rocket Lab. And I know they're disparate companies and they're not exactly the same. But unless I'm missing something completely that's going to completely blindside me, I think that this is going to be a gift. And I think a lot of people will eventually realize, hey, this is something that looks pretty good. I think Cheniere went through something very comparable where people were like, I don't know, it's tough. But now Cheniere is a $50-odd billion company and will probably grow to be a $75 billion company once they fully get everything expanded at Corpus Christi and Sabine Pass. So that's when it starts to get fun, because now they're starting to buy back stock with Cheniere, and we haven't even hit that sort of thought with with what can happen here at Venture Global, because I think, you know, the at the moment they're not paying a large amount of dividends. They did do a dividend raise for Venture Global, but it was super small. I'm honestly would be happier for them to focus on getting the debt into investment grade, getting
Mhm.
it to a point where they're A level debt, or A minus debt, and then get to a point where then they start focusing on, okay, well, we refinanced it, we own 50% of the trains, we're only at a debt to EBITDA of 2.5 or 3, and if that's the case, then you can start to raise it, because at this point you're going to be generating so much return on equity for these trains that it makes sense to buy back stock rather than pay down the debt. If you're only able to say get lease, sorry, the loans out at say 6, 7, 8%, and you're getting a return on equity of 40%, then just buy back the stock. It's
Yeah.
advantageous for everybody.
Yeah, and the thing is, the debt, remember, it's all about how much you can generate positively on EBITDA. So if you can do 10 billion, 30 billion is not that bad. That's investment grade. Once you get below 3x EBITDA, that's investment grade. Now the thing is, because of the choppiness of some of those spot prices, you probably need a little bit more cushion. So in order to get like a AA rating, you probably need more like 12 to 13 in EBITDA and probably 25 billion in debt, which is doable for this company in the 2030s, but like I said, the idea here is not, hey, I'm going to buy this and it's going to double tomorrow, and believe it or not, if let's say some major event happens where spot prices go absolutely insane, this thing could double tomorrow, but then it might come back down once those prices come down. So that's exactly what we saw in June when the US attacked Iran. Remember that? And then all of a sudden spot prices kind of jumped up and everyone's like, oh my God. And they bought Venture Global up. And then when the Iran conflict didn't go anywhere, everything started to come down again because everyone thought, oh, they're going to close off the Strait of Hormuz and all the natural gas out of Qatar is going to be locked up. So people were just buying up forward contracts. And when that didn't materialize, it was like, oh, whatever, nothing burger. And then, and then spot contracts went back down. And so, and then Venture Global took a little bit of a dive. So that's just naturally one of the things that you deal with when it comes to energy investing. It's one of the most profitable businesses if you get in at the right time, but it is fraught with some weird movements based on commodities, right? The one good thing is that it's reoccurring revenue that's pretty solid. You're not going to see like 20% revenue collapse on these guys. So that's the one good thing. There is one thing we have to make sure we let people know. Right now, the EBITDA that Venture Global is generating, significant amount of it is coming from selling on the spot market. Eventually, the off takers that they did have like contracts with, they will start getting their LNG deliveries at the end of 2026. And the EBITDA from CP1, from current Plaquemines, actually, is going to drop off. Not a lot, but it's going to drop off. So it's not going to be the I think right now they're almost getting 5 billion in EBITDA from Plaquemines next year. So next year we're looking at probably another 6 to 7, maybe less actually. I would say probably between 5.5 to maybe 6.5 guided for EBITDA next year, maybe a little higher, but it kind of depends. So depending on forward spot prices. So that money is going to, of course, be used for construction stuff. But then what happens is as those contracts come online, their EBITDA is going to drop. But the thing is, they have the other facility now, which is CP2, that'll be coming online, in which case now that'll add to the EBITDA. So then the year after that, so like 2027, you're looking at 6 to 8 billion in EBITDA, right? And then eventually that's when they work on the next project that's going to have bolt-on. Like that's the other thing that they're speaking about also, which is doing bolt-on construction for these other 3 facilities, which I think that they'll probably do before they do CP3. So if they do that, those are much lower cost, because think about it this way. You're not building all this additional infrastructure. You're literally just adding more trains to an existing site. So if they're able to do that, that means that that'll be another high margin business that they'll have that's generating more EBITDA. So over time, the key to track with this company is just how much EBITDA that they're generating, but then also what kind of debt levels are they going up on as well. So if you look at Venture Global's debt, which I was surprised, it's not going up even with all this construction, all this additional supply that they're doing. The debt is not getting higher by that much. It went from 30 billion, I think, in the start of the year to now 31 billion. So most of this new construction that's happening, it's all being financed by existing cash flows.
Yeah. So to give people context, right? So the nameplate, just with what's been sanctioned to date, it's going to go to 50. So the nameplate right now is at 30, and I think they're going to be. I think right now they're closer to about 40 MTPA once you kind of take into consideration the expanded capacity and everything. But you have Calcasieu Pass 2 Phase 1, so that's another 20 MTPA that's been added in terms of nameplate. I think they'll match what they're getting out of Plaquemines, which is another 28. So overall, they're going to be producing about 68, which would make them slightly larger than Cheniere is right now. But Cheniere is also going through expansion projects as well. But once you sanction Phase 2 of the Calcasieu project, which gives you another 18 trains on top of the 36, then yeah, you get probably another 14 MTPA overall, and that would make that Calcasieu Pass 2 facility really, really huge. And then you have the Plaquemines expansion, which Chris was talking about. I think that at the moment, based off of previous, they're trying to get that sanctioned in mid 2027. So that alone will almost double the capacity of what's going on at Plaquemines. So if you think about all these projects being added, how much additional EBITDA you're going to get, and that's even before you get CP3, which CP3 is basically and granted, keep in mind, this is not on a full spa basis. This is a spot basis, but what partially spot, partially spa. What you're producing right now from both Plaquemines and Calcasieu Pass is basically going to be the equivalent of CP3. CP3 alone will be 30 MTPA, close to 40 MTPA of total capacity. And so that, I think, is where you start to see like these things, once they fully get FID'd and actually come online, that's where you're going to start to see the big money. And I still have Delta in there, but I wouldn't be surprised if you get over 150 MTPA once everything's all said and done. And to be very honest, I think at a low range, very like bottom case range, you could get, based off of each MTPA, $500 million worth of net market cap value. So if you do have 150 MTPA instead of, let's say, the 184, let's just say it's 150. At a minimum, the company in the long term should be 75 billion. But I think it's going to be closer to $750 million to $1 billion per MTPA of kind of rule of thumb value. And if that's the case, then you're talking about over $100 billion in market cap. Granted, it's going to take some time to get there, right? But these guys get it online faster than anybody else. And I think it's all going to be about pace. So one thing, if anybody's looking at the spot contracts to the right, the CP2 has not been updated for the most recent 4 or 5 announcements. So it's much more than 9.25. But you can see already that even before these 4 or 5 announcements that have been kind of addressed over the past couple of weeks, CP2 phase 1 was already 50% pretty much sold. And
yeah, I was about to say that. I was like, CP2 these are for CP2 phase 2, not for phase 1.
Yeah, exactly.
So, just like I said, these guys are moving at such a rapid pace. Some questions that the guys asked in the comments, they're actually really good. Chris, wouldn't they hedge price for LNG if they think price will go up locally? With hedging programs, it's always a hit or a miss. Sometimes the way that you hedge is you buy contracts in the future for a certain price, but let's say the price goes way below that. That means that you've wasted your money on those contracts. And if things go up, those contracts are worth it. So, this is one of those things that as a commodity producer, you're going to have to contend with, like what kind of like hedging that you're going to do. But it's one of those things that's very hard to do. Like it's very hard to predict weather and spikes in LNG prices and demand forecasts, but I'm sure that they will have a team dedicated that just deals with making sure that they're hedged properly to generate proper cash flows in order to service their debt and use a lot of their profitability for buybacks and for all of these things. That's just part of the business. So they will be doing all of those things, you know. So I can't exactly put it like, oh yeah, this is what they're doing and that's what they're doing. It's just it's just what they do. What do you guys think of the current Shell litigation in the Supreme Court? It's I don't think it's anything. It's something that, you know, like Shell is going to do on their own to basically you know, try to get something out of this whole ordeal. I don't think it really goes anywhere. So that's about it.
So yeah, that's the thought I have about VG. I personally am going to keep adding. I think that this is kind of a blessing in disguise. I don't think that we're going to see this price for long, but I've been humbled. I didn't think we were going to see south of $9 again. So I think this is a kind of a blessing, and I think it's just a matter of time once people recognize how much EBITDA is actually flowing through this, and you get past some of the short term headwinds. Then I think I don't want to say it's blue skies, but I think you'll be headed close back to the $20 range at some point.
Yeah, I'm telling you, man, this litigation shit is the only thing that's keeping this thing under $20 right now. If the litigation was not an issue, just like how the stock, remember when the Shell arbitration came in and that came out to be a nothing burger, automatically everything just started, the valuation just went insane. And then all of a sudden with the other one, now it's in the other direction. So at some point, all of this stuff is getting resolved. And the thing is, if you look at the total dollar amount to get everything resolved, it's not even that much in the grand scheme of things, you know? So can't speak too much on what the arbitration amounts are going to be and everything else. But in the grand scheme of things, you know, it's not like, oh my God, my business got a parking ticket, so I'm going to have to close down my trucking company. Like, no, you pay your parking ticket and you keep it moving. So it's kind of like that, you know.
I think Chris kind of has it up here on this particular slide. It's interesting. It's like it's a catch-22, right? You get so much additional capital pay down from the commissioning cargoes because you're able to own them, and to keep in mind, like the power facility for these things isn't necessarily fully up and running for like Plaquemines, for example. So you have to supplement it with, you know, additional power systems that aren't fully complete as of yet. And so all that money that's being generated is directly to the company rather than that profit and those spas being shared with the third party sellers. So you're able to put that directly into the business itself and or fund future things like CP2. And so like this particular example that's kind of showed on the screen is they're showing the $29 billion in total project cost, but they're going to get $8 billion during the commissioning phase of being able to pay that down. So by the time you actually get to the contract online date, probably in 2028, 2029 timeframe for CP2, you're already going to have paid down $8 billion, and you're already going to be generating an additional $4 billion. So the whole project, if you paid everything down, you know, you might be able to pay it off in 4 to 5 years in total, but it's probably not wise to do that. It's probably more wise to be flexible and continue to reinvest back into the company. So yeah, you're going to be able to grow like expansively. So it's interesting. It's definitely interesting, and if you're not 100% certain about it, you know, I encourage you to kind of look at the economic models of putting something together. You could probably ask Grok to help you. It's actually pretty simple. I've done it just using Grok. So if you know what to kind of ask, read through the earnings report and ask some key questions like, oh, well, they're going to bring on this, and it's going to be spa, and it's going to have, let's say, $2.50, $2.30 per MMBTU. liquefaction fees plus 15% of Henry Hub, plus they're going to keep, let's say, anything above nameplate, let's say 20 to 30% above nameplate to be for spot pricing. Like, what kind of EBITDAs would you estimate from something like that? And the numbers you're going to get are probably going to blow your mind. And so, unless share count gets out of control, which I don't personally see, there's about 2.5 billion shares outstanding. I can see a world where in 10 years' time, there's the ability, not necessarily the guarantee, but the ability to be paying upwards of $2 a share in dividends. Because in that respect, you'd be putting out about $5 billion worth of shareholder returns. Now, obviously, some of that could be done through buybacks, and some of that could be done through dividends. So I think that you kind of think about it. It's like, well, I could see a world where this company is generating closer to $15 billion in EBITDA. 1/3 of that could go towards actual buybacks or dividends. So in some way, shape, or form, I feel like you're going to be seeing around $1.50 to $2 worth in some sort of shareholder returns on an annualized basis. So maybe that's bullish, or sorry, too optimistic, but that's where I'm thinking my head's at for that. You're on mute, my guy.
Yeah, it's probably going to be a quarter each. So it's probably like quarter of the ops cash goes to capex, quarter of it goes to debt repayment, quarter of it goes towards dividends, and another quarter goes towards share buybacks. That would be like the most optimal thing, right? So now you've got some maintenance capex, and you've got additional projects if you want to do them. That cash flow is just going there. You've got 25% that goes down to paying down existing debt, making sure that your debt levels are not going insane. And then the other two portions are paying shareholders, via dividends, and then paying some to buy back shares. And now you've got crazy shareholder value return baked in for like the next 20, 30 years, So yeah, like I said, this company is going to be a super major. In my opinion, it's going to be a super major one day. So
I think there's a difference of opinion what super major means, but
yeah. Well, super major in the LNG industry, not necessarily in
very good.
oil and natural gas exploration and all that. In terms of like LNG, this is probably going to be the biggest LNG company in the world.
I think so. Yeah, I think this company will rival. It'll in time export less than Qatar, but the fact that you're thinking about a single company exporting as much as an entire country is massive. And I see this coupled, and this is why I'm so bullish about both VG and Next, is if you think about this potentially VG getting close to 150 MTPA, and then the entirety facility of Next Decade being close to 60 MTPA, between both of them, they're putting out about 200 MTPA of approximately 300 to 350 MTPA of export capacity by the late 2030s. So you're talking about just in two companies controlling the majority of the liquefied natural gas export capacity in the United States, which will be the number one export of the United States. So why are you not like that? To me, it's like, it's very obvious, as long as the financing works, because obviously it's a very capital intensive. But to me, it's almost like, where we're at. We've overtaken Qatar and Australia in terms of the number one exporter in the world. Why not be a part of something that's going to double in its entirety? And the majority of that capacity increase is going to be coming specifically from this particular company and Next Decade. Like, it's, to me, it's
don't forget about Cheniere. Don't forget about Cheniere. Cheniere is big too.
Unless Cheniere, Cheniere is almost complete. Like, unless they have additional land that they have, I mean, they're in a much more mature stage than Venture Global and Next Decade, right? So I'm not downplaying Cheniere, but yeah, if you were to include Cheniere, I would anticipate that it's probably 75-80% of the entirety of the capacity of the United States, not necessarily including Western Canada, but the entire, because I think Cheniere is going to try to get to 80 to 100 MTPA on their own. Then you'll have VG, which will be 150 MTPA, and then you're going to have the 60 MTPA from next decade. I mean, you're talking about 260 or so total MTPA of export capacity out of the 350 MTPA by the end of the decade. The end of 2040. So yeah, I mean that's where the math comes in for me. So investing in those three companies, you're going to own a large portion of it. Unfortunately, Cheniere has already been to a place where I think that we will get to with VG in terms of rising EBITDA. And anyway, I'll stop.
Yeah. No, it's like I said, the industry is going to have 3, maybe 4 key players. There are other projects out there if you just want to see like what it looks like. Let me just share screen. So there are smaller players outside of right here. So there are others. So if you look here, this is the map of the US, and these are all the constructions that are happening. So if you look here, all of this capacity since 2016 to 2023, that's pretty much what the US has gone from. They've gone from 0 to about 12 billion cubic feet per year. And then this right here, Corpus Christi, was like an expansion from Cheniere. And then after that was Plaquemines, right? So look at is it Plaquemines or Plaquemines? How do you pronounce it?
I have no idea.
I don't know. I've heard everyone say different things. Plaquemines, Plaquemines, whatever. So, but Plaquemines is this giant solid ball that just came online that you can see right here, right? And then you've got Corpus Christi, which is coming on next year, and then you've got LNG Canada, and then all these other little ones. A Golden Pass is supposed to come on. I don't even know how far Golden Pass is in their construction.
Not sure. That's Exxon and Qatar.
Yeah, let's look that up. Hold on. Golden Pass LNG construction. Let's see how far they've gotten. Construction jobs. Golden Pass. Golden Pass LNG contractor emerged from bankruptcy. Who was their contractor? Kiewit? Zachary Holdings. See, this is the other thing, too, that you always have to run the risk of when it comes to constructing these LNG facilities. You have to have like companies like Bechtel and Kiewit who do the construction work. These guys have become so good at building these facilities that they're literally managing the entire project themselves and keeping everything on a very strict timeline. So, that's a big risk for a lot of these other companies where they've done a lot of a lot of overruns. But these guys, they've been hitting their target and they've been doing well. So, yeah, I don't even know how far Golden Pass construction is. Have they started?
I honestly don't remember.
Let's see. Construction progress. Okay, this is what Google says. Construction is ongoing, targeting first half of 2021 for train 1, though potential delay into 2026 is also possible due to setbacks from a contractor bankruptcy. Despite delays, this project is 75% complete and new lead contractor has been secured. Okay, so they are under construction, but they've gotten delayed a couple of times. Interesting.
As
so
far
right
as
here,
I'm aware, I don't think in the Exxon investor report I've seen it start up yet.
Yeah. So right here, granted a 3-year extension on service deadline set for November 2026 to accommodate construction. See, this is what I mean. Like even other projects, they seem really good. Like, oh my God, they're going to be able to do this, that, and the other thing. But they haven't been able to get to like meet the deadlines and move at the pace that these guys have been able to move at. It's pretty crazy. But let's go back to the other thing now. 1 second. US FERC LNG. These, yeah, November 2025. So these are all the facilities that currently are under construction. So you've got Cameron Pass, which is what we have with CP2. Elba Island is like a really, really small thing that went from importing gas to exporting gas, but that's literally nothing. Brownsville, which is next decade, that's still under construction. Sempra, I'm not sure where the status on that, but that's a smaller facility. And Sabine Pass is the Golden Pass one, which right now is currently delayed. So Plaquemines is already under full production, but probably within the next like 6 months. And then Calcasieu Pass, that Woodside one, is the former Cheniere site. And I don't know if there's even construction started there yet. I just know that Woodside farmed out that site to other people. So
You mean Tellurian?
Tellurian, yeah. Well, Woodside bought Tellurian. So, like I said, even the most optimistic projections right now from some of these other LNG EIA, I think, are pretty aggressive at best. This is from January. I want to look at them more. EIA export facility time. Okay. So Woodside, according to this, is not going to come online until 2029, if it ever does. Cedar and wood fiber is in Canada. And with the Canadians, you never know because they're always going back and forth with their environmentalists. Port Arthur, Rio Grande. So Rio Grande is the one for Rio Grande LNG. I mean, it's pretty much a two-way race between
I mean, they have CP2 phase 1 like the end of next year, you know? Like that's
Well, remember, I think this is based on commissioning, right? So other facilities, they do target dates based on COD because remember, they don't introduce gas until like the train is fully built out and ready to go. These guys are like, put the train on, let's go. We're going to start producing.
Well, you think about it, they have the capacity to, because one train for most people is 5 to 6 MTPA.
Mhm.
And these guys, one train is 3/4 of an MTPA to 1 MTPA. And so it's like for them, it's a lot easier. So they're able to bring on like 1 to 1.5 MTPA at a time, versus everyone, like somebody else will have to wait, massive amounts. And it's like, so these guys, I think they just have the capability to have valves in between like each of their trains pairs, because I think they get stacked in pairs. And so they're able to bring on one pair at a time. And with that, they can, it just makes the commissioning piece, I think, a little bit simpler for them.
A good question is, well, Ahmed is asking, wouldn't LNG get hit hard if Russia-Ukraine resolves? To some degree, maybe, but I doubt the Europeans are like gonna, in the next 15 to 20 years, gonna say, yeah, we're gonna start to use Russian LNG again. Like that's it. That ship has sailed. Like the Russians invading Ukraine was the greatest thing to happen to US LNG in my lifetime. Because at that point, it became very clear to everyone that you cannot trust Russians to provide that LNG, because at any point they could theoretically, you're paying them to arm and then eventually invade Europe. So the Europeans are definitely going to say no. The Koreans and the Japanese, which are another big buyers, they're not in the business of trying to basically, screw themselves out of the US economic zone. So that's not going anywhere. And then India, which does have a very good relationship with Russia, they face one big problem. They're surrounded by neighbors that will never allow a natural gas pipeline to be built that goes directly, right? So you've got Pakistan on the northern border and you got the Chinese on the northwest. So there's no way for India to get Russian LNG, and India is going to be a big consumer. And then, of course, you've got a lot of other countries that are going to go from exporter to importer, which people don't even realize, So there's a lot of points that are probably going to happen if you think about like the demand for electricity in the 2030s. I think with the propagation of so many electric vehicles, number one, you're going to see electricity demand from that grow. Then you've got these AI data centers. You think we're the only ones here in the US that are going to be building these data centers? No, eventually all of these other countries are going to build their own data centers, in which case they're going to need a lot more electricity. Where do you think they're going to get it from? You know, they're going to have to import LNG, turn it into electricity and use it for their data centers. So, yeah.
I think it'll be interesting. I mean, there's other hubs that are going to be coming online, like Argentina. FLNG is going to be something that is something to watch to see how that impacts. But I think that that's going to take some time, and FLNG isn't necessarily the most easy to work with. You'll have Mozambique, a lot of those projects coming online in the coming years as well. A lot of them went through force majeure with some of the government issues as well as the political and security issues going on in some of those countries. So I'm curious to see what happens with those. And then where else? I still think that Guyana in the second half of next decade will also have a place to play, because right now a lot of that gas that's being produced from all these boats that are being producing oil and gas at the moment, they are not exporting it to a local market. And if they do, I think Exxon is creating a kind of like an ethanol plant that is going to help with electricity slash create some ethanol that they can then use to export. But that alone isn't going to utilize the entirety of the gas that's coming out of Guyana. So a lot of that's going to be re-injected until I believe you get to the second half of that project where they start to actually export that gas as a potential LNG project. So we'll see. Who knows? That might. I'll stop. There's other things I could say, but
someone said Ghana versus Venezuela. I think you meant Guyana versus Venezuela, not Guyana versus Venezuela. No, I'm saying someone in the comment section.
Yeah, no, I'm reading it. Yeah, but there's a lot of different countries, so I get it's a lot to keep track of, but it's a big chess game, and who knows, any country, depending on what regulatory environment, and some people even said the U.S. as well, like in 2028, depending on what regime comes in, it could put a slowdown to some of these things as well. But I'm cautiously optimistic that generally these projects get delayed, and generally they're over budget. And I think Venture Global and Next Decade have done a really good job so far of getting them online and rather under control. Next Decade at least doesn't seem like it's spinning out of control as of yet. But then again, they haven't even started train 4 and 5 in terms of construction as of yet. So, but for now, it seems like things are going in their direction versus other people, as you stated. Historically, things generally run over budget.
Yeah, man. This is a company that's already producing LNG. They've, when it comes to a lot of businesses, when you're investing in them, the execution is probably one of the most important pieces that you have to take into consideration, right? So when you do a new business, when you get to the point where the first iteration, there can be timing where things are a little bit, like it takes time to learn everything. These guys are already on their second project and about to go into their third project. Every iteration, they become better, they become more efficient, and they become faster at getting things to the end project, end goal, and at a price point that is actually really, really good. A lot of these other players, they're literally relying on their EPC contractors to do all the work for them. These guys are taking the bull by the horns and doing everything. So even like when you just listen to the CEO, Mike Sable, he'll tell you like, listen, we've learned a lot of lessons, and we're not just like, oh yeah, you know what? We're going to let the EPC contractor decide how things work. No, they're actively working on making the newer trains even more efficient. I mean, from just a nameplate standpoint, these guys are churning out 40% more than the nameplate, which is kind of crazy in terms of efficiency. So you can have a nameplate of 1 MTPA and they're actually producing 40% more on top of it. That is the level of efficiency these guys have been able to get out of their projects. I mean, and not to mention they're vertically integrating too to make sure that they're never constrained because of things like shipping rates. Like if you guys remember with LNG tanker rates, I think 2 years ago, the LNG tanker rates were insane. So these guys, what do? They bought their own cargo ships. They said, "Frick it, we're good. We'll make sure the LNG gets delivered." And I think the Europeans really appreciate that, and that's why all of these companies are signing deals with these guys, saying, "Look, it's proven that these guys can deliver. So we don't mind signing contracts with someone that can deliver." You know, and I think over time that counterparty risk is going to go away. I think the biggest losers here, to be honest with you, Matt, are going to be BP, Chevron, and all of these other guys who have basically said, you know what, we don't want to be, they're still customers with Venture Global right now, but they don't want to be part of the newer spas, which I think is a big hamper on them, because I think there's really a lot of value in the ability for these guys to produce low cost LNG that these guys could sell overseas and put as a part of their operations, just because of some short-term disagreements on pricing. But you know what? That's just how the market is sometimes. We could get away from that. But I do have to go though, so I don't know if you have any parting words.
I was about to say I can't comment on what you just said, but
yeah.
But yeah, the last thing I wanted to share specifically, you talked about the boats. So let me bring that piece up a little bit. So this is the 3 months ended. So just in the boat side, the DS&S, they were able to make about 56 million specifically from the boats in this quarter. And then if you look at the 9 months, they were able to make 152 million from just the boats, which I think is pretty cool. To be able to see that kind of come through. So, versus last year, they lost money because I think they were just buying the boats, right? They didn't. Yeah.
Well, they didn't have the ability to charter them. Yeah, they had to charter them.
They weren't able to actually generate any money because I think, like you stated, they were using them, but to get sales, but not from the boats themselves. If that makes sense.
All right, brother. I'll see you later. Have a good one.
Cool. All right. Thanks, Chris. You're the man. I will stick around for a couple minutes and answer any questions that you guys have, not necessarily about VG, but anything. But let's just scroll up a little bit, see who's hanging out and present. Appreciate everybody being here. As always, we had over 250 people live. So we got Trucker Rob. Thanks for being here. We got Muds, Jubu, Juku. As always, guys, as well, I appreciate you all being here. To be able to participate in the chat, it's just a simple subscribe to the channel, or follow the channel. I don't know what it's technically called. You don't have to pay anything. Completely free to participate. You just have to follow the channel or whatever it is. Subscribe, I guess, to the channel. No membership or anything like that needed to be able to participate. We got Rambler, we got Anthony Burke, we got Alex Koch, JVM, Justin Muhammad, Federico, Alex, Ed, Ray. Thank you for being a good mod, my guy. I think I saw Zoe in here as well. Zoe, I don't know why you're not a mod, man. What the hell? I gotta fix that. I'll fix it in the back end, but that's upsetting. So now you're a mod on my channel. We got Chelsea Hollywood, James Velez, Felipe. We got Sachin. Sorry I didn't get you up there. I saw you good in here earlier. Appreciate the continued support, brother. We got JK, Essence of Bitcoin. Michael. I know we saw Tevis in here earlier as well. Thank you for the continued support. There he is, Hot Tevis. We got Miss Lisa in here. Samad. We got lots of great people. Michael, Jesco, Groove, Alex Blate. Sorry, my contacts are playing games on me. We got Miss Melanie. Always good to see you. Always good to see you guys. So yeah, let's scroll to the bottom, see if there's any quick questions. What's that thing looks like a punching bag? This is a microphone. This is what you guys are hearing me from. Let's see. Do you have a 5-year horizon on VG? I think we just walked through it, my guy. Pretty good extent. Your number one energy storage? Man, I don't know. I don't on the stock side, I don't know. If you ask me, like if I were to build my own energy storage, there's probably a couple companies, but I don't think it's where you're asking. I think you're asking about stocks. Sergio, thank you for the dedication, my man. You could be anywhere eating your dinner. You're here with us. Much appreciated. How do they make money from the boats? That's a phenomenal question. Thank you for asking and speaking up. So for the LNG side, right? What they do is generally these spas, these sales purchase agreements are done what's called FOB, free on board. And so you pay for the LNG to be put onto a boat. And then the third party, as Chris was kind of talking about, the third party people that are buying from them, the traders, they'll take that from the US and pay, let's just say, the $2.30 for the liquefaction fees plus the Henry Hub plus 15% to get it onto the boat. And then they'll take that, let's just say generally it's $6 to $8 to get it on the water, what we call it in the Gulf Coast. They'll take it to Europe and they'll sell it at say 11, 12, 13, or they'll sell it to Japan at 11, 12, 13. Now, of course, some of that is eaten up in just shipping costs. So whether you're renting the boat, leasing the boat, or the fact that you have to use some of the LNG to power the boat itself to get it to Europe, plus 2 weeks worth of transit time to go from one location to the other. That all is kind of what we're talking about by using the boats. Now, Venture Global is, instead of just doing what Cheniere does, which Cheniere just owns the facility, fully contracts all the sales out. I don't think they do much spot pricing. At least they don't anymore. At least as far as I'm aware. They take any excess that is not being used by third parties that have signed up that sales purchase agreement. So in the case of say the CP, the Calcasieu project, they will take 10 MTPA, sell that to their third parties, and then whatever excess above that, above nameplate, they'll sell to whomever. And because that facility is majority owned by Venture Global, they'll be able to sell it to Europe or to whoever the highest bidder is. So they'll be able to put it on a boat, figure out whom they're selling it to, and do so. Now, other companies don't want to necessarily do that, right? Other companies might just want to say, "Hey, we'll buy $10 billion worth of equipment, we'll liquefy it, and give it to you, but you guys do the other contract stuff and find the buyers and go to Japan and go to Korea, etc." It's really just up to whomever and what they want to be involved in, what business they want to be involved in. But Venture Global is specifically getting the boats themselves to be able to take that gas to Europe. Otherwise, anyway, head does hurt after a while. Yes, it does. I do not have a finance degree. I have an undergraduate degree in petroleum engineering. I taught a lot of this finance stuff to myself and just learning over the years. And that's one of the things. If you teach a lot of this stuff to yourself, sorry, my eyes are half closed because I'm sleepy and my contacts are getting dried out. You end up getting to a place where you know a decent bit, but you don't know what you don't know, and so things can come out of the woodwork. Specific scenarios that can happen, etc. So always just be somewhat cautious because sometimes you learn something and you kind of take it as gospel, and like price to earnings, like you learn price to earnings ratios and you're like, oh, this is the only way to evaluate a company, and you realize that it's a rule of thumb, and sometimes rules are made to be broken. There's gray areas, right? So yeah, I don't know much about Dell, so I'm gonna skip that one. Would you take lump sum or payments if you won the lotto? I would take lump sum. I'd have to see, but a majority of the time everyone said that lump sum is the way to go, but we would have to see. Any good stories from London? We had a great. I got a lot accomplished, a lot of great meetings. Obviously, can't go into detail, because it's my 9 to 5 and everything like that. But yeah, it's it was a lot of fun. Got a lot accomplished. Had a great team dinner on Tuesday. Team is changing though, so that's all I can say. New people coming in, some other people going out. So it was nice to see everybody. I went to Penn State. I did not go to A&M. There already is, man. Yeah, there's rows upon rows. Like there's boats. Um, there's boats of of yeah lines of boats. There's like one or two all the time being filled up at some of these facilities, and so think I think they stated that there was over 100 boats in the quarter. I think so. It's like a boat a day between the first project and the second project being filled up. I don't know what this is respect to, but I feel like mechanical engineers might be able to get themselves in a jack of all trades. Chemical engineering is probably going to start you off at a higher salary, but mechanical engineering, I think, just learning statics, mechanics, dynamics, um, basics around electromagnetism, stuff of the like. I think it's going to be more applicable than maybe chemical engineering. Not to say chemical engineering is bad. I just think that maybe chemical engineering is a smaller subset. There's mechanical, like you can go into solar energy, you can go into all different types of energy, oil and gas, building cars, building rockets. Chemical engineering might be useful for building rockets as well, but maybe specifically on the thruster pieces. I don't know. I could be wrong on that, but I think mechanical engineering, there you kind of have a jack of all trades. There's just always ongoing contracts associated with CP2, and I think it's probably that relief that everyone's maybe oversold. I think on VG in terms of um where it's at. VG won't supply uh, AI data centers, at least in the United States. Maybe some of it will be used for supplying energy for Europe and Japan and Korea and maybe some of these other countries that they're exporting to. But generally, the energy being used to supply some of these AI data centers is going to be from just regular natural gas in the United States, not liquefied natural gas. Best hedge bet? I don't know. I'm picking up. I'm slowly dollar cost averaging into some good oil and gas stocks that I think are going to do well, and waiting for a potential pullback to load up on them a little bit. How's the cash flow chronicle public portfolio doing? Good question. I don't have it open right now. We're down on um, Venture Global, obviously next. We bought something else recently. I forget what it was. We bought some Meta. Um, but I mean, we're not hemorrhaging cash, but we are down. I think overall for the year we're still up, but we'll have to check it out on Thursday. Hopefully, we have the opportunity. Good price in January? I don't know, man. I don't have a crystal ball. Sorry. What was wrong with Rocket Lab today? Up and then sell off hardcore. I think it just might be macro, but part of it as well. Neutron is being delayed officially. Um, the statement was is that they'll get the rocket on the pad in the first quarter of 2026. So we'll see. Is this the banker's lamp? Yeah, just the banker's lamp. You just have to be cautious with some of this. Sometimes it sounds like a good idea, but sometimes these companies can overlever very quickly. I haven't done too much, but TPL I think was trading too expensive for me, so I never bought it. But I know it's taken a huge dive, so it might be a decent time now. I don't know. I do not know, but um, when Chris had talked about it earlier in the year, late last year, it was just too expensive. Land Bridge, I don't know anything about. All right, all. Well, thank you for hanging out with me. I'm gonna take these contacts out. I just I have a 4070. Um, and my laptop is, you can probably hear the fan in the background. If not, then thank God, because it's annoying. But I have two computer monitors, one that I look at straight ahead, and then you guys ever see me looking to the right, it's because I have a second monitor. I've thought about shifting them so it's like I'm more in between, but like I generally face straight, and I have an L-shaped desk, so you can see this is part of the desk, obviously, and then I'm sitting at the other part of the desk, um, and it's up down and down. So I don't know. I do think about that a lot though. Like, should I sit more like in the corner here with my belly in the corner, and then I have both screens? I could look this way, that way. Um, and I've also thought about just moving the camera in between the monitors so you're kind of facing more directly to me. I think when I was in the UK, some people really liked the fact that I had kind of the laptop camera, which kind of showed more like up and to the right. If I didn't have so much garbage on my desk, like I have a cup full of sunflower seeds that I've been chewing on as a snack, and so that's kind of gross. So otherwise, I would probably like see what it looks like. But my thought process is maybe put the camera kind of here, but we would see. Hey, I think that the pipeline companies are good. I don't have any problems with them. It's just I'm not. If you're looking for dividends, I think they're great. I'm more so just looking for growth in what I'm investing in right now. So that's no hit on Steve. Now, if there's a large pullback in those, I would potentially look at them as capital appreciation plays. But to me, the thing with MLPs that you have to recognize is the structure is basically issuing more shares to basically get more capital that they can hopefully continue to do capex and or M&A to get more EBITDA, and same thing with REITs, real estate investment trusts. They generally sell more shares, hopefully at a non-dilutive, sorry, not in a value accretive manner, so they're able to sell them, use that money, generate higher rate of return. But that's why some of these REITs, they take forever to grow, is because most of the time they just continue to sell shares. And so the hope is with Venture Global being a C corp and not an MLP, that they don't do that. They're not diluted, and so hopefully they buy back stock. Versus a lot of these master limited partnerships, it's very dependent upon what debt they can get on them. And so they're kind of debt vehicles to an extent. And if you invest in them, you're paying at an ordinary tax rate, not a dividend tax rate. So if you're in a higher tax rate, no bueno, because you end up paying potentially in California up to over 50% with state and federal tax. All right, that was weird. Hopefully you guys can hear me. Don't know why my internet just crapped out for a second. But yeah, so I think with you just kind of have to be cautious about those things. You're gonna get taxed potentially at a 50% tax rate if you're in something like California. And so just kind of keep that in mind. Now, if you have a tax advantage account, very different story. But I think a lot of times people see high dividends, they're like, oh my God, I have to buy it. I'm also going to get a 20% rate of return on my principal. And it's not always the case. So just kind of keep that peace of mind. Same thing with the real estate investment trust. So it's a different type of vehicle. And that's why they pay higher dividends, because they have to pay out 90% or so of their net income in some sort of dividend. And then the reason being is because you're the one paying the taxes for the company, not the company paying any sort of taxes. So versus other companies like C corps, they're paying taxes, and then they still also distribute dividends, which you also will pay a dividend tax on, not an ordinary tax on. It doesn't make sense. Look up master limited partnerships and like Grok or something like that, and see how they're taxed differently than say normal C corps, and it'll give you a definition. But that's pretty much it. Like a dividend company, like a venture global, will tax you 15-20% depending on your tax bracket. But master limited partnerships and real estate investment trusts will be taxed anywhere between 0 to 50% if you're living in California with state income tax. But you can expect at least 35% on a federal basis if you're in a higher tax bracket. So kind of keep that in mind. But anyway, I'm getting sleepy. I need to drink something, some water or something, and head to bed. I appreciate you guys sticking with me, even though I got cut off briefly by the internet. But hopefully this finds you guys well, and hopefully you guys enjoyed the episode. And I will talk to you guys soon. Thank you guys so much. Cheers.
That's my quant.
Your what?
My quantitative.
You show me a pay stub for $72,000 on it, I quit my job right now and I work for you.
Be first, be smarter, or cheat.
I'm not fucking leaving!
Sell it all today.
Or look at his face. It's beautiful!
Welcome to the fucking show.